Hey, it's the FinTech Newscast. My name's John, and with me, as always, is Steve. Welcome to the podcast.
Thank you, John. Happy to be here. Not on a beach,
Okay,
but we're here.
we got you out of the way. Let's get to our really special guest for the week, Patrick Gruhn, the CEO of Perpetuals, among many other things. The word serial entrepreneur gets thrown around casually these days, but we really have to put a capital E on entrepreneur for Patrick. So glad to have you on the podcast.
Yeah, thank you for having me.
So many things to ask you, but we'll start with your most recent press releases that we saw. Your newest product, I think, UpsideOnly, which says it has risk-free trading. So people suggest or bring to trading ideas, and when you trade on it, they can participate in any gains that come about from it. And I guess if they have bad ideas, you just don't trade on it. So there's no loss that's expected anyway. Is that a fair summary of UpsideOnly?
Yeah, that's pretty much accurate. Yeah, I mean, so how it works is people trade like they would usually do. The only difference is they have no real money at stake. We just give them virtual money, so monopoly money, if you will. So, and then they do their trading strategies. And we have an AI build that's basically the main secret sauce in this, which selects the good from the bad trades. And if the trade is good, we do the trades with our own capital as a prop trader. And if we win, we pay 50% of the profits to the clients that gave us those trade signals. Yeah.
Oh, great! That
Wow.
works out really well because all I have is monopoly money. So that's the
Now,
only way I can trade.
yeah, the real problem is that like more than 90% of the people, actually 99, if you look at longer studies, are losing money. So that's why it's really a big deal. So because if you go into retail trading, like day trading or leverage trading specifically, then you will just lose, and that's really the problem we are tackling here.
Yeah. A lot of people treat the market, especially these days, more like gambling, or has it been so
Yeah, well,
gamified
exactly.
with like a Robin Hood, that kind of thing?
But if you go to the casino and you go to the roulette table, you have almost a 50-50 chance. And like the numbers, the empirical studies say on trading with leverage, it's less than 1%. So, I mean, this
Less than
is
1%.
way worse than gambling.
Wow. So how is, I'm
Yeah,
I'm,
no,
I'm
it's
curious. You mentioned this trade as well. How quickly can you do this? Oh, how quickly will the AI that you have created determine whether this is a good trade or not? And then how quickly can you actually action that trading? Because of course, in trading, time is money. So how short is that window of action?
So this is analyzed in real time, but we need from every trader, let's say roughly like 3-4 weeks, it depends on how much they are trading, on historical data, because it learns from the historical trades and it identifies where are they good at. So like one person might be great in gold long trades, but very poor in everything else. So like Bitcoin, he always loses. So, and this is basically what the AI is discovering. So it needs like 3-4 weeks, but then it's basically instant. If the people enter the trade, it's analyzed in real time.
From your website, you see it looks like it spits out a percentage probability that this will happen or not happen. What counts as a good trade? What triggers you to action? Is it a certain percentage, or does it
Yeah, so
depend on the type of trade?
yeah, technically it's really like a probability score that at the end our AI determines for every single trade. So I mean, it's a little bit more sophisticated in total. So it's a cohort of traders. So it's usually not a single trader. So it's like let's say 5 or 10 traders together. If they all enter into the same direction now, if they would like go into gold long right now, this might trigger basically the signal. So it's a group of traders because it's all about collective intelligence. So in very simplified terms, as I said, 99% are losing when trading or are only flat. So really the data shows 90% are losing, 9% are plus minus zero, right? So hovering around break even, and 1% is making money. And this is basically identifying the 1%. But if you do not look only on one person, but on like a group, then basically the probabilities sum up with each other and you get a way higher probability. If you have 10 people that are usually, let's say, 60% accurate, if you combine their signals, then you can come up with like an 85% probability. And from there, it's just risk management, that you make sure you win more than you lose. So that's really basically it, how it works under the hood.
So the system will say, well, this is in our overall portfolio, and over time, this is going to end up ahead. And then that's when you'll pull the trigger if those
Yeah,
conditions are met.
yeah,
So it could
correct.
be 90%. Is there a situation where your model comes up with 90% chance and then you won't trade for some reason?
Yes. Yeah, we have certain triggers. So one easy example is, for example, if the volatility is too low. So because then just one trade can disrupt basically everything, right? Like
Ah,
Bitcoin
yeah.
over the weekend, for example, like on a Saturday evening or whatever. So there are
Uh,
certain other triggers, or also extreme events, like if the volatility exceeds a certain level, then the
so
same thing. Because
outliers. Uh-huh.
yeah, completely outliers. So like tail events when something really blows up, right? So like, I don't know, if Trump would announce tariffs again or whatever, something like on October 10th, in those cases, usually our circuit breakers would basically kick in and would stop trading altogether, usually.
Well, fortunately, he's a very stable genius, so you don't have to worry about things like that.
No changes
Good
will
to
take
know.
place. Yeah. Yeah. Go ahead.
Oh, just one more question on just how the functionality kind of works. So the payout is distributed by however many people were included or made that trade. So it's split up maybe, like you said, 10 ways, or if
Mhm.
there's 1,000 people, the 50% of the gain would be distributed over 1,000 people then, right? And the
Yeah,
follow-up thing then is the trade can be for any length of time, like for 1 week or a 5-year trade, or
now it's
how
usually,
does that work?
yeah, so usually we do not trade longer than a week. And the majority
Oh,
of
a week.
trades, it's like lasting less than an hour. So
Wow.
because the longer
Oh,
you are in the market, the more, let's say, random it becomes, and the more external events that you have no control over
sure.
whatsoever have a chance to basically hit you. If you're only for 1 hour in the market, your chances are way higher that nothing extreme happens than if you stay an entire week, right? So, to the group of people, so it's usually more around like 10 people for a signal. It's not like
Well,
a
as you
cell.
grow, it'll be more though, right?
Yeah, but nevertheless, we would then split it more up in different trades and different assets. So that's what we are doing right now. So, and we fire after the first 10, for example. So it can be more, but
Ah,
it's still unlikely that 1,000 people, because they have to really trade at the same time, and we have users from all over the world. We have a little bit more than 100,000 users right now, but we have people from the US, we have people from Nigeria, we have people from India, we have people from Germany. So it's from all over the world. So they are trading at different time zones and also on different setups. Some are doing like 5 minute trades, some are doing like 5 day trades, right? So it's a little bit it really depends. So we might enter into 3 trades all in gold, for example, but maybe for different timelines. One for less than an hour, another one for like the rest of the day, and another one for 3 days or something like that. So and then it's a different set of people for each of those trades.
okay. So it doesn't have time to build up to any large number. You'll pull the
No,
trigger then.
usually we start early enough, basically, or soon enough, as soon as the probability has reached a certain level.
And I'm
Oh.
sure you've thought of this, but is any risk or controls that maybe you have to put in place for people trying to game the system somehow?
I mean, so there are one thing is the most important thing is just one, because it's kind of a prediction system, right? And this is
Yeah.
insider trading, preventing insider trading. So, and this was the most important thing, and this is also why never one trader can be a signal. It can always be only a group. So you would then already, by definition, need an entire group of insiders. Then it's almost not insiders anymore, and they would have to show the track record. So this is usually the biggest thing. Otherwise, we are checking if people are just trying to spam the system with
Yeah.
random predictions. So since you do not need any money or so to open an account. One risk is somebody creates 1 million accounts with random email addresses and just spams the system. So, and what we
Yeah.
do here is we do 2 things to mitigate this risk. You can basically prove that you are human. So, in essentially 2 ways. One is we
Steve's
look.
still working on that.
Yeah. So, with AI, it becomes a bigger and bigger problem. Actually, who knows, right?
Yeah.
Even if you see
Yeah.
them on video, I mean, they're pretty good video AI avatars. So, anyway, One thing is to basically check how is their historic trading behavior. So, and the better you trade over time, and the more human it looks, the more points we give you. So, and this point balance will give you a higher payout. So, to simplify it, we have, let's say, 2 traders that gave us a signal. Again, it's in reality more, but for simplicity's sake. So, one has 0 points, the other has 100 points. And the one person gets a higher payout than the other one. Both gave us a signal. So, and the second way is you can deposit money with a trust. We have set up an independent trust, and you can deposit money there to show that you're a human. You can deposit $50. It's in a trust, segregated. We cannot touch it. You can never lose it, and you can request it at any given time. But this is the second way, because if you put up, let's say, $50, then if you would create 1 million accounts, you would need $50 million. So this gives us also higher certainty. And basically what our model does, it values those signals higher than just from random addresses without a real track record, or even with signals that this might be algorithmic trading, because those algorithms have certain patterns in them. So basically we have this point score system that helps us to define which signals are more trustworthy than others.
So
Yeah.
you say a track record. So people are, instead of making their own trades, they're using the system to make trades that they think will be successful because they don't have to put up their own capital. You get market signal, crowdsourced expertise as a value, and to making essentially a proprietary trade where you're sharing the benefit of their signal, and that's the value they're providing. Okay.
Exactly.
When you just say risk-free trading, it sounds,
Too good to be
you
true.
know,
Everybody thinks it's a
too good to
scam.
be
That's
true.
our
But
big
you are getting something. You're getting information.
Yeah, from our perspective is we have like performance-based analysts. That's how you can put it, right? We pay you as our stock, commodity, whatever analyst, crypto analyst, and we pay you based on performance, how good your signals are. That's another way to basically put it. This doesn't sound
Ah,
that much as a scam. So that's why I
yeah,
like to
yeah.
explain it that way as well, because this risk-free trading is whatever scammer usually tells you, right? So give me, but the difference is also, we never ask you to deposit money. Again, you don't have to. You can do it, for example, for the higher payout. You don't have to. You can just trade without it and just show it with your performance. So that's why people still trust us, and that's why in 4 weeks we got 100,000 clients. So people understand basically there is no real risk of scam, simply because I do not deposit money. Then I cannot be scammed.
Got
Hmm.
it.
So prior to launching this company, you were the head of Europe for FTX, and I'm curious. I know that you were looking at ways to avoid client exposure, right, in terms of their capital. I'm curious, what are the sort of security or ethical things that working at FTX affect how you shaped and architected this new venture here?
So, I mean, yeah, as I was at FTX, I have already seen one thing, that even prior to the bankruptcy, all the retail users lost. So all the users that use perpetual futures, they lost, and they lost big. They lost, I think, accumulated almost $1 billion in total.
Mm,
So
wow.
just from leverage trades and perpetual futures and so on. And who made the money? Those were very few market makers. So it was very clear to see. So it's basically a redistribution from the majority of the retail traders to a very few sophisticated market makers. And this was really what started me to think about, okay, how can we solve this problem, right? What can we do to basically avoid this trap that retail traders are just taking advantage of, and you redistribute money from people that actually need the money, yeah, to just big Wall Street market makers. Or actually, in crypto, many of them are not exactly Wall Street. It's usually the offshore entity. So that's essentially the entire idea of preventing this. This is maybe the biggest thing that FCX taught me. And then the other thing is basically not taking customer deposits in an unsecured way in any way or form, right? So that's why even if we allow people now to make this deposit to show that they're human traders and not AI bots, it's a segregated US-based trust. which is labeled its client account, and so on and so forth. And we cannot even touch it. It's a separate legal entity. Different people have control over those bank accounts. So all the good governance that you usually have in companies that FTX simply did not have. Sam Bankman-Fried was basically the only person with access to everything.
Did it slow you down at all with your next venture, with starting, I think it was Early Works before Perpetual, yeah? Association with FTX, was that an obstacle, or people, or your track record stood separate from what happened?
No, it was certainly a big delay because we had to deal with the bankruptcy, right? I sold my company to FTX. That's how I became the head of FTX Europe. So I sold my company in 2021 to FTX. And then, almost a year later, they went into bankruptcy. And then I had to deal with the bankruptcy estate and negotiate to buy back the company. That was
Did you see this coming, or was that a big shock at the time?
This was a complete shock. So nobody saw this coming internally. So everybody was shocked. I remember, it didn't start with the bankruptcy. The big shock was the announcement that Binance is acquiring FTX. That was a big shock for us. This was like 1-2 days prior to the bankruptcy, right? So I remember very well, I was on the call with our European team, like our general counsel and many other local executives. And then there was this tweet, okay, Binance acquires FTX. We were all like, what? Because this was really the main competitor of FTX, right? It was a pretty tough fight with Binance all the time. So and then we realized, something must be seriously wrong. So because this was really considered the competition.
So you had to deal with the bankruptcy, and it sounds like you already had this idea, because this is up and running pretty quick.
Let me correct this. So actually what I did then after the bankruptcy, I started a course at the MIT in AI. So, and there I had to write a homework project. So that's where I thought, okay, so let's try to analyze the data, because I just bought back my company. So in my company, we did not even only service FTX, we also service Binance, Bittrex, and many others. We had a few fintech companies from Europe as well. So we had a ton of data, more than 22 billion retail trades. So real trades, with including the balances and so on. And I thought, okay, let's do this as my homework assignment, analyze those data with AI. And that's how I came up with this idea. That I said, hey, there seems to be something. And then I made it to a product. So I started this company, UpsideOnly, as part of Perpetuals, to basically create a professional product out of this initially homework assignment at the MIT.
It's interesting because it seems like the narrative is that folks who work in crypto tend to be very much wary of innovation in a way, but I think that from what I've read, you seem to be kind of betting on the opposite. And I'm curious. It seems like regulation really is part of your product now, right? Especially with your background, you're a lawyer, etc. You teach, I believe, ethics as well. And I'm curious, where do you think that this idea that regulation is a product is most likely to be wrong, or what are some potential blind spots that you may be missing?
I mean, with regulations in general, the problem with regulations is that it always has unintended side effects, right? Every law has this. And this is a big problem with regulations. And the entire crypto space, where it comes to leverage trading, is, just a circumvention of regulations. That's all it is. So like perpetual futures, so leveraged crypto trades, they are for all practical purposes CFDs. That's how they are called in like Europe and in Asia, or here in the US, they would be classified as swaps. So, but basically the trick from many crypto players was, hey, we just call it perpetual swap, so perpetual futures. So, and say this is crypto, so it's unregulated. So it's a big circumvention. What happened, what all the crypto players were doing. So, and this also has one serious side effect for established players. So they cannot compete with this unregulated players, right? So because those products usually have like leverage restrictions, like what you usually have to do is you have to analyze your clients when you're onboarding them and have to determine, is the product even appropriate for them? If somebody does not even understand what leverage is, as a broker dealer, you're not allowed to give them leverage. It's that simple. So, and that's what this entire crypto space did, trying to basically circumvent regulations. I did it the opposite way from day one. Yeah, as you mentioned, I'm also a lawyer. I'm a lawyer and software engineer. So I had a law firm in Switzerland called Crypto Lawyers. that's how I came up with this entire idea of this companies that are sold to FTX, saying, okay, we do it completely regulated, but real blockchain. So like my company did the first real tokenized stock. So what we now see take off, which is quite sad for me because we did this already in 21. We had free transferable tokens on Solana that reflected like Tesla shares, Apple shares, whatever. And we had pre-IPO contracts. We did them through FTX. So like pre-IPO contract on Coinbase, Airbnb, and others. So all those things that are now basically coming back in the crypto space, we had already like 5 years ago.
Timing is everything.
Yeah, and I mean, FTX, really slowed us down. Coming back to this question, right? So we had to shut everything down because of the FTX bankruptcy. We were ahead of time at the time of basically this development. Yeah, but anyway, so I think it is possible to have regulations matching the technological developments if you do it right. So, but the big problem in crypto really is that many people are trying to just circumvent it to make it easier. Of course, it's way more convenient. So it's really, we operate a regulated exchange in Europe as well right now for professional clients. So only broker dealers can onboard there. So, and it's, I mean, it's extremely complicated. There's also regulations. Like in Europe, we have a regulation that is called DORA, which is an IT regulation. So you have to go to a lot of IT audits and other things that all those crypto players simply don't do. Many of them that I worked with, they do not even have a real test system. They have basically like a development system, and then they have their life system. So the classical software development process, they don't even follow very often. So therefore they can be faster. So that's the biggest deal with regulations, that it's basically unfair for people that act in the regulated space if you let the unregulated players basically compete with you. Biggest problem in Europe, by the way. Europe is notoriously bad in enforcing something against companies that are from outside of Europe. Because they say, oh, they have no office here, so we can't do anything. So and then they just service the clients over the internet, cause the same harm. Yeah, and domestic companies from Europe can hardly compete with them. That is a general issue when it comes to regulations, in my experience.
So you operate under, I believe you operate under MiFID II, DORA, MiCA, EMIR, etc. You mentioned DORA just a few seconds ago. Those all could sound kind of scary, but I'm curious, which of those actually has places the hardest constraint in terms of what you can do?
So, I mean, MiFID is a Markets and Financial Instruments Directive. So this is everything regarding securities. So it's like it's a combination of the SEC and CFTC regulatory-wise. Yeah. So it governs all financial instruments, no matter if it's a security, a commodity, a future, an option, whatever. So, and this is a pretty tough regime, and we are operating under this. We have a MiFID license, correct? And then you have also to comply with DORA, MiCA. It all comes out of basically being a MiFID regulated firm. So, I mean, the other toughest things are you have to do a lot of reporting. So also incident reporting. You have to actively notify your regulator if something unusual happens, and you have to have a lot of controls in place. So, and the hard part is to find the right people for all of this, because they must be really qualified, right? The auditor will ask them questions and so on and so forth. And again, those unregulated crypto players. I mean, maybe the best thing is this quote. I think it was the chairman of the parent company from CME. Who said Hyperliquid is like 11 people and they do more trading volume than Nasdaq. That says it best, right? You have something with 11 people. I mean, by definition, you cannot have compliance there, right? It's because if you run something like this, those are all developers. I guarantee that. All 11 essentially, maybe two guys marketing and 9 developers. So, and it's, of course, we need a lot of employees just for like compliance purposes and for or 6i principle things and so on and so forth. And this makes it sometimes tough being a regulated player in this market. But nevertheless, I think there is an opportunity, like what we did now with UpsideOnly, to basically utilize one fact, that the others are harming their customers in one way or the other, either because like FTX, they go bankrupt because they're unregulated, or in a different way because the clients are losing, because this entire business model is just built to make clients lose.
You know, it's interesting because you also, as I mentioned earlier, you teach ethics. I believe you also teach entrepreneurship, and I'm curious, how do you practice ethical entrepreneurship, right, in an industry that's as cutthroat as high frequency trading? Is that even possible?
Actually, I do not think so, because I think, I mean, this actually goes all the way back to like what Peter Drucker and others wrote like
Yeah.
many decades ago. So at the end, if you run a business, I mean, your objective is to make money now and in the future, right? Of course,
Mhm.
if your goal is only I want to make money now, then it's a rug pull. So this is not a business, not entrepreneurship. This is just trying to find people that give you money and then you run away with it. So
It's the next
but
sucker.
Which a lot of people do. Yeah.
yeah,
Yeah.
they do. So, but this is basically the opposite. So, if you want to build really a company, I mean, you have to act responsible, right? Including like negative aspects you cause outside of the organization. So, like any manufacturing plant, therefore, has to consider, okay, what are we doing to the neighbors? What are we doing to the environment? Whatever. So, because otherwise, it will fire back sooner or later, which kills one of the two objectives: making money now and in the future. So, and the same is getting employees. Like for us, we need good machine learning engineers for our AI system. So, I mean, those people get like offers all the time from the big AI companies, right? So, and basically to keep those people, you have to give them something in exchange, which is, I think, basically a positive outlook to the future. Number one, that they know, okay, I really want to be associated with this, and it's not embarrassing if I tell somebody I work for this or that company, yeah, right, because they got negative media or are involved in, you know, whatever bad practices there might be. So, and secondly, that they know, okay, this company is built really for the next 10 years at least, and not like it's not meant to go out of business in 6 months once the owners made enough money to basically to retire. So this comes all together. So it is just classical business principle, right? So I also teach law. Actually, this morning I gave my IT law lesson in Berlin again at the university. So it all comes also down to basically comply with the laws, because if you are notoriously breaking the laws, it will fire back. So Sam Bankman-Fried has learned the lesson the hard way, but even Binance has learned it, right? It was very costly. And I mean, ZZ got a very, let's say, low sentence at the end, but nevertheless, I think it wasn't a pleasant experience for him, nevertheless.
No, nobody wants to go to jail, right?
Exactly.
So
Yeah.
it's a big
You
deterrent.
mentioned teaching a class in Berlin. Well, first, how do you feel about the entrepreneurship and technology industry in Europe, or more specifically in Germany, I guess? And how did you end up in Oregon?
So there is very little entrepreneurship in Europe in general, and in Germany specifically. So this is
Interesting.
one of the reasons. So I left Germany 15 years ago. So I lived 5 years in Switzerland, and then since 10 years now in the United States. So, and the main reason was I started my first business, I was 18 years old. I started in 1999, so right around the dot-com bubble. And in Germany, it's so hard to build a company. It's unimaginable with ridiculous regulations, but also it's a pretty hostile climate to entrepreneurs. So it's not really really a positive thing to be an entrepreneur. So I think what most Germans like to do
Also,
is
like in society, it's not like
the entire
celebrated that
society.
you started
Yeah.
your own business or took a risk.
No, they basically consider you from day one like a bad actor. You are taking advantage of your employees. So it's not seen like you are creating jobs.
I
It's
have
seen
seen
like, okay,
this in
you're taking
France. Yes.
advantage. Yeah. And I mean, the big companies. So like if you have reached a certain size, I'm not sure if you know this, but if you have reached a certain size in Europe, then 50% of your board members must be elected by the employees, for example. This
Yeah.
does not qualify for small companies, but that's why they think only big companies are good, because they have like 50% of the board seats from elected from employees. So this is a fair company. A small private company where basically the owner says what's going on, it's just a bad thing. This is kind of the mindset there. And then there are so many regulations. I started actually in the where I hired employees in the basement from my father, and like I spent a lot of money in my parents' house, my father and mother. I spent a lot of money to make this a really nice office. The employees were super happy. So, but one day somebody walked in from a government agency and said, okay, so this office must be shut down, $6,000 fine because your ceiling is 2 inches too low. It was already a
No.
relatively high ceiling, especially for a basement. So it's illegal. So you have now 6 weeks to find another office and move everybody, or we will revoke your business license. So, I mean, such a climate. That's why there is a saying in Germany always, Bill Gates could never have founded Microsoft in Germany because it's illegal to run it in a garage.
That's you're on mute, John. But yeah, it's interesting how we see so many founders when they're coming to the US because of the more friendly business environment, and just I guess the culture of just creating companies and sort of taking risks, right? I think that from my perspective at least, I think that the fact that we have really good and forgiving bankruptcy laws are actually a boon to the economy, because you can just fail and fail and fail again, and as long as you do it
Which I
in
personally
in
really
good faith,
appreciate, by the way.
we try we try so hard to fail. But I think that as long
That's
as you do it
another thing, by the way.
in good faith, you can go somewhere. Yeah.
Yeah. So, in Germany, if you are bankrupt once, you are done. Right. So just from a society standpoint, nobody will give you a second chance. That's also part of the mindset. So you have to do it right in your first attempt. That's basically the mindset there. Even the entire society is very unforgiving when it comes to basically failed ventures. So because they always blame basically the entrepreneurs for this. It's really tough. That's why we have almost no entrepreneurship in Germany, to be honest. I mean, nobody can name even one big tech company, for example, from Germany. Usually, there was one that was semi successful, but this turned out to be a scam. This was Wirecard Bank. This was
We remember
a
that very
little bit of
well.
an
Yeah.
SME loan, but it was a complete scam, right? So,
Yeah.
and that's the only thing. So, of course, a scam can even work in Germany. So, but you cannot really build a sustainable business. I still operate a TV network, a nonprofit organization in Germany, and it's already hard enough to deal with all the laws and regulations there.
Yeah, I've heard so many examples, especially from Japan and France, where people laugh or are very dismissive of someone starting their own business or trying to raise money. I heard somebody say they would give him the exact money to produce the product, but not one penny more. The guy told him, "I'm not paying for your lunch," also,
Wow.
Yeah.
along with this. Whereas in the US, you hear about somebody asking for 2 million, just barely what they need, and then the VC giving them 10 million to make sure that they scale and take over the world, or the best chance that they can. So it's very interesting to change. I mean, there's pluses and minuses all over the place, but it's
Yeah.
very interesting. But how did you end up picking Oregon of all places?
So actually, we lived in Montana for 5 years. So, but basically where we lived, we had like 3 seasons. So winter, which was basically most of the year. So
Yeah.
then we had 1 week all the other seasons, and then we had wildfire season. So and my wife was really missing the ocean. So because we are both from northern Germany, Hanover. So and
Mhm.
the Northern Sea was not far away. So that is usually a vacation spot where you go there. It was like 1.5 or 2 hours drive. So, and then, we found the Oregon coast and we really, really liked it here. So, and also way closer since I have to go to San Francisco from time to time, obviously, for
Yeah.
business meetings. So it's way more convenient traveling from here. And having the Oregon coast here is just nice. So we really
It's
like it.
beautiful. Yeah.
Amazing wine as
If
well.
if you
Amazing
need
wine.
if you need a ride from the airport, it'd be worth it just to hear your conversation. But you have so many new products now, building around the blockchain-based infrastructure for trading and exchanges, especially for the exchanges. Who are the main customers? What's the plan for getting that implemented in as many places and as large as possible?
So the majority of trading volume, so our license is mainly from Europe, but it's recognized in the US by the CFTC as a foreign swap trading facility, and also in Australia and in Hong Kong. So we can essentially service regions out of Europe from this regulated area. So in Europe and Asia, the main trading volume is not in crypto derivatives, it's in CFDs, contract for differences. We do not have them here in the US because under the Dodd-Frank Act, they were basically for all practical purposes banned because they were classified as a swap and you had to run an exchange to offer them, which nobody ever did. So that's why they are not very well known anymore. But what they are basically in all the other countries, they are bets on what happens to the price between entry and exit. So you just, hence it's called contract for difference. So you enter now at the 1 million position into Apple shares and you have it running for 1 hour, and then in 1 hour you pay the difference. If it's higher or lower, one side pays the other. So this is where the majority of trading volume happens, trillions. It's a really big market in Europe and Asia. So, but they are now facing competitions from those crypto players. Because perpetual futures are the exact same thing, just with a different name. You do the same thing with a perpetual future on Bitcoin or now on gold, or you can trade them on everything, right? Now. So even on decentralized exchanges. So and our main clients are those former CFD providers that are now looking to go into this new crypto derivative area because they cannot compete with them otherwise. Because CFDs on crypto, for example, have a leverage cap in Europe for 2 to 1. So you can only have 2x leverage. So, and if you can trade with, I don't know, 200x leverage on Hyperliquid or any other DEX or even on centralized offshore exchanges, they can hardly compete with them. As I said, Europe is also not enforcing anything really against many of those offshore companies, simply because they don't know how to send them a letter even. They don't even have an address, so they don't know what to do. So therefore, those providers, which have a lot of clients, and again, the market is like 10 times larger than the crypto derivatives market already, they are looking for alternatives. And that's what we are providing for them. So in the US, the closest thing are maybe Forex traders. They do a similar thing. So those kinds of companies we basically bring to our exchange and making them crypto ready, that they can also allow crypto deposits, for example, because stablecoins are just great, right? So sending a wire transfer, like if I send a wire transfer to Europe, it's just a pain. Stablecoins are just there in seconds, so no problem. So, and we are basically helping those traditional brokerage firms that have a ton of clients to get into the crypto space and offer those new kinds of instruments to be really able to compete with the upcoming crypto competition.
You know, I'm curious, are there any other asset classes beyond, say, you mentioned commodities and equities in crypto that you think you want to expand into?
So, I mean, we have already on UpsideOnly like also indices. I mean, it's still equities, but technically it's like the NASDAQ index and stuff like this. So, I mean, I do not want to go into real like prediction markets where it's just more or less chance. So those kind of things I think have no real world value. But like say betting on, okay, what is the president saying in his next press conference? I do not see any value in this. So, but basically everything that has a real world hedging use case, we are going into. So right now we are also working on a few areas like in the compute area. So basically like chips and so on. So we are working on those products. I cannot really disclose everything what we are working on, but essentially that you can invest into the AI infrastructure, if you will, with exchange traded products and things like this. So, but generally we are open to really any instrument that is still a real financial asset and not just gambling. Because again, I'm really not I'm really criticizing this development right now that we are going from investing into just really gambling. And the prediction markets are the best sign of it, right? I mean, it's just a different name, usually for a sports betting company. That's what most of them in reality are.
Yeah. I suspect that after the World Cup is finished, we'll see reports about the insane volumes of betting that have taken place over the tournament, and it should be in the billions of dollars, I assume, if not more. It just seems like it's a massive problem that seems to be growing exponentially.
Yeah, there was, I forgot if it was Bloomberg or Wall Street Journal, there was an article also showing that the majority of the users are losing on prediction markets. Again, it's the same thing that we see in the financial markets. So it's a redistribution of ordinary people to basically professional players that have basically advantages that you cannot compete with, including
I'm sorry to hear about Germany out of the World Cup, by the way. I hope you didn't lose too much on that.
No, luckily I do not bet on sport bets. Yeah.
Ah, um, uh, uh, Speaking of bets, but more on the business side, it's if perpetuals does succeed, and what do you think retail trading will look like in 5 years in a way that it doesn't quite look like right now? Like, what will you change about the way in which we do retail trading?
Yeah, what we are trying to change really is that retail traders keep their hard-earned money where it should be in really long-term investing. Like even
Mm,
S&P 500, right? Like on average 20%. So buy and hold. Way better than trying to get the next, I don't know, the next big green candle out of whatever market. So, and basically in combination with this, still, I mean, people still want to have this opportunity to get rich because, I mean, many people, they have their jobs, they have their loans for their car, mortgages for their houses. So they need this element of hope that they can still get out of this, right? They do not want to realize, okay, for the next 30 years, I just have to continue. That's why they also go to play the lottery, right? So, and this is why people even go to prediction markets or to day trading platforms. So, and our hope is that with our product, we offer the same psychological incentive. You can get rich with us, right? If you have the right trade setup, our AI selects it, we might pay out hundreds of thousands of dollars or even millions, right? Since we trade with way larger positions. So you can still have this basically this justified hope that you can make it with your skills if you trade hard enough and learn hard enough, but at the same time not getting ripped off and losing all the money, because many people, they go into the day trading area because again they want to get out of their financial constraints. But what happens is they lose even the money they cannot really afford to lose. They need it for retirement, they need it for a car repair, whatever in the future. So basically changing this, because right now the entire day trading space is really built on one single assumption: the retail user always loses and we take advantage of this. This is what they all do. Like for the exchanges, leverage. Why do crypto exchanges even offer leverage? Because it leverages the fees as well. If you do the math, what you paid for your trades, just because of the leverage, it's sometimes like, I looked at some accounts from people, like they paid $100 a day just because
wow.
of the trade size. So, and even making up for those fees, you need a pretty high profit already just to break even, because if you have 10x leveraged fees, it sums up easily. So that's what we really want to change. Basically, still people having a justified hope and really use their skills, but not getting taken advantage of and losing it. Because there are other aspects. I mean, people, this is called behavioral finance. Actually, I mean, you're in the Bay Area, in Berkeley, they do pretty good research on this. So they just published a paper recently also showing that even if you educate people about classical errors in investment decisions, so it doesn't help. They still make the same mistakes. It has to do with the heuristics in the human brain. So a simple example, people have the tendency to close winners too early. So your trade performs well. You trade it with a $500 profit and you close it with a $500 profit. Because now, out of the sudden, you are risk averse. You are afraid that you lose the 500 again. Even so, you said this will bring me a $2,000 profit, but you close it at
The fear
500.
of loss is much stronger than the fear of gain.
Yeah, but
Yes.
only on the winning side, and that is called
Yeah.
the disposition effect. If the opposite happens, your trade goes into the red, into the negative, you do not close it at 500 because it would be final. The people say, oh no, it will go back to break even. I leave it open. Then it goes to minus 1,000. No, it will go back. I don't close this losing trade. It's just a dip. It goes back up. So and then they get liquidated at minus 2,000. So even if this trader is good, and let's say in 65% of the trades he's correct, if he always closes the trades with $500 profit and the 45% losses with $2,000 loss, they are still bankrupt. This is one of the things, and this is what our AI takes out. So we are not looking into the risk management of the users, because humans are very bad in risk management because of those psychological factors. So, and again, you cannot even train them away. Even they did this, I think those were Berkeley students in behavioral finance, actually, and they did a study with them, and they all showed the exact same biases and psychological issues as all the other traders in the world.
Well,
I am hanging on to my Melania coin. I don't care what you say, Patrick. So what is the next step now? I mean, you've built so much here, so much infrastructure, regulatory expertise, trading expertise, software, blockchain infrastructure. So what do you need for the next step to expand this? What's is there any constraint, or you just need more time to get this in front of people?
So, I mean, we will just improve it. I think we are super happy already with more than 100,000 clients. In 4 weeks, 100,000 clients is a pretty big milestone. I'm super happy that this worked out that way. It gives me already a very good confirmation that my thesis was correct, that this is really a problem. And you can solve this problem with a better product instead of more regulations. Because this would have been the alternative, right? Just calling, especially for me as a lawyer, ban this, ban retail trading, ban leverage. So, and I thought, no, instead of asking regulators to ban it, just make a product that takes out those disadvantages and only leaves the upside. Hence, we called it upside only. So I think for us, it's just improving the AI model. So we have already finished our first trades with real money. They worked very well. So, but again, you can improve this. I mean, just think about how the first version of ChatGPT looked like to the models that we have today, right? So in AI, it grows fast. So I think we will just improve it and make it better and better and better. And then we can also pay out more people. Then it's maybe not 1% anymore at the end. That helps because we will also educate them. We are right now in the progress of creating education programs that our upside only users can basically get education, because if they get better, we get better. It's a win-win, right? So, and that is really the idea and what we are working on now, making sure more people win together with us, because our incentives are completely aligned. That's the difference.
Mm.
Again, with all the other exchanges, they make more money if the client loses.
So, is there any regulation that you would suggest that you think would make things better?
As I said, I'm not a big fan of regulations. That's also why I'm crypto, I guess. So, because again, the big problem is good intentions have very often very bad consequences in reality, right? And especially laws have the tendency to create very undesirable side effects. So that's basically the main thing. I think more than education, what I would hope for, more than regulation, would be more education for the public, because what we just discussed here, most people don't know that that only 1% is winning. The people are thinking, okay, everybody makes money in crypto and in crypto perpetual futures. So if you open an account, you become a millionaire next week. So that's really what most people think, right? So, but I've never seen a millionaires list from a crypto perpetual futures traders, because it doesn't exist, because they are all losing. So it's just making people aware, and the same like in Europe and Asia, it's with CFDs, that this is simply or calling it out what it is. This is worse than gambling, and it's just a redistribution of your money to the big fine. It's what exactly crypto basically wanted to change, right? The idea was with crypto in the first place, giving money really, or the power over money and transactions in the hands of the people. And now they are trading on centralized exchanges. Then
Yeah.
things like FTX can happen. They are getting taken advantage of, and so on and so forth. So I think really education and calling it out. The problem is right now, this is true in Europe, in Asia, in the US, that basically it's a big lobby of crypto firms, of centralized crypto players, and of financial market participants, market makers, or CFD brokers, whatever, have basically so much political influence that nobody's really calling it out. It's still called investing, right? They call it like invest into Bitcoin via perpetual futures, invest into Apple shares via CFDs. It's not investing. It's really short-term gambling, nothing else.
Yeah.
First of all, thank you so much for being the first lawyer and software engineer that we've had on the FinTech Newscast. And contrary to what you might think, that's turned out to be a good thing.
Good.
Thank you so much for joining us. And please keep up the good work.
Yeah, thank you very much for having me. It was my pleasure. Thank you.
I hope good ideas like this keep expanding. All the best to you. Thank you so much. That's Patrick Gruhn, the CEO of perpetuals.com. Please hit subscribe to keep up with the latest in fintech news. And thank you for listening.